Doug McIntyre, the editor-in-chief at 24/7 Wall Street, and I've got with me Lee Jackson, our guru on stocks, the economy, corporations for over a decade. And we're going to talk about the five stocks we really hate in this market. So I'm going to tee up the market for a second. The NASDAQ, it is a nosebleed level. And as far as I'm concerned, it got there because of one stock, NVIDIA. I know that some of the other megas, cap techs are up, but this is an AI driven market. What worries me about the market beyond that is that everybody says there's no inflation. Inflation, it got up to 8 or 9%. The Fed went nuts, raised rates, but now the Fed's wrung all the inflation out. You look at survey after survey, people say, I'm still spending more for food than any amount in my lifetime.
Credit card debt's huge.
Food is, if you said to me, what do people look at? They look at gas for their car, and then they look at food or fuel for their houses, both those things.
Right, of course.
So I'm going to start mine. To me, the easiest stock of all is NVIDIA. And not only is it taking a run it's really unprecedented for a stock with its market cap, but the Wall Street Journal had an article a couple of days ago which said NVIDIA has way more competition than you think it does.
True.
All over the world. And what you don't see is you don't see these companies that are getting billions of dollars of VC money. You and I can't own them, but it doesn't mean that they're not competitors. So one of the things that happens when you're the most successful person in the world is everybody looks at what you're doing and says, I can do that. And all the money, smart or dumb, goes into the competitors thinking, well, NVIDIA is going to we're going to get some of that NVIDIA money. So I don't like NVIDIA. Listen, brilliant people, yes. Leading edge, yes. A lot of competition coming. Absolutely.
Well, and the biggest point at this juncture, especially for our viewers, is the stock price. This is starting to reek of 1999, where it's going to go higher. It's going to go higher. Well, who's the last guy in? Who's the last guy that buys the last share at $1,000?
The last guy, the last share. I'm going to stick with mega cap techs, and I'm going to Alphabet. And this is the reason. People said Google would never have competition. They probably got a 90% plus share. Certainly US, certainly EU and UK, several other major markets around the world. AI search may be the first time that you've got real competition for Google. And if it works well, you do not need 30,000 people. You don't need an Alphabet size staff. So if you get a good AI search engine, and look, somebody's going to do this.
Oh, absolutely, they will.
My guess is it's Microsoft, because Bing is a dog. You really start to do a better job of that. There are going to be people who do this who are in the private sector. There's funding going into companies right now for AI-based search. You don't have to have Google's market share go to 50%. It's a sell if it drops from 94 to 80. So I don't like Alphabet at all. My next one is Disney. Already a fight for board seats. I saw that the Disney grandchildren just came out in favor of Bob Iger, the current CEO. That who cares if the children? It's not like they own a massive number of shares. We love Bob. No one cares. You've got Nelson Peltz in there, one of the great Raiders of all times, saying that management is awful. And guess what? Nelson is right. These guys, their studio business has died. They used to be, probably for a decade, every year, number one in studio market share in the United States.
Oh, absolutely. It's plummeted.
And the problem is all those superhero cartoons, they've played themselves out. once you have 20 movies about something,
Yeah.
there's a point at which you can't. Captain America can only do 50 or 60 things. He can't do 90.
And it's a certain demo that they attract, and that demo's aging.
That demo's aging. Disney Plus, they said we're going to be big. The streaming guys, that is still ruled by Netflix and Amazon Prime Video. They early leads, tough to catch, and not only that, everybody's in the streaming business now. Paramount, NBC, the place is stinking with streaming. And one of the things that research has shown is people might get 3 streaming services, but people aren't going to get 6 or 7.
No.
And that means Disney is probably not in that 3 often enough for it to matter. And one of the things that happens, people may not know this term, but in streaming, there's something known as churn. And churn is simply that a lot of people every month cancel their subscriptions, and you've got to replace all those people. It's not just hanging on to the people you've got at the end of that month. Anybody who left, you've got to replace. And if you want to grow, then you've got to add a bunch of people.
Yeah.
So I just think, it's going to be a rough road for Disney from here. And they're in bad businesses. That's
and the people at the top, are they've made some of the most idiotic CEO moves in the last 5 to 10 years that has ever happened in the industry.
Yeah, it's horrible. My next one's Ford Motor Company, for a simple reason. It is the worst run major car manufacturer in the world because the Ford family controls it. It's one of these examples of the guy who started it was brilliant, maybe his son and grandson, but now that you're multi-generations, and these 2 people do not belong in the job of running and controlling the shares of the Ford Motor Company. To me, here's the number I dislike. Their warranty costs lead the industry, which means that Ford cars are poorly made.
Exactly.
And every time their financials come out, you look at the warranty number. They are spending billions of dollars fixing cars that should have been made correctly when they came off the
assembly line. Yeah, sure.
The first time that they came off the assembly line. And I can't quite understand why can't you get that right? It doesn't make sense to me that they sort of missed the boat on that.
Well, and they have some failing assets that they have to make decisions on at some point,
Yeah, they do.
And what are they going to do? And it's funny about the Ford family. Bill Ford has been moved out of the CEO slot per se, but he's still the executive chairman or whatever. And it's still the same bad ideas. It was like that's how they had to fix the Detroit Lions, get the Fords out of there, and it got better.
And it got better. Last one is Gannett. People think, well, Gannett can't go down any further. They're the number one.
It can go to 0.
The number one owner of newspapers in the United States. This is an example of a company where we could take the best CEO in history. Let's say we took Jack Welch, who was maybe considered the best CEO of the 20th century, and we put him into Gannett and said, I want you to fix it. The point is he has no chance. They are in a business that you could say, well, it bottomed, but the next day it bottomed again.
Yeah.
It's too tough to be in a business where you're trying to sell people newspapers that are made of paper, or you're trying to sell them digital newspapers when most of the ad dollars in the digital world are going to Amazon, Google, and Meta. It's you're looking for scrap. So it's a shame that
especially from an entertainment value, and the younger people don't even know what a newspaper is for. They're always looking now at podcasts of their favorite people like Rogan and people like that. That's what dominates media now.
It is. And listen,
newspapers.
To me, it's a shame that this has happened because
it is.
I've been in the media business. My father was a newspaper publisher, started in the industry in the 1950s. It's a shame, but it can never be fixed, and that means the stock will keep dropping. So those are mine.
Yeah. Yeah. Well, I have a crew that's kind of in there as well, especially with the AI debacle. My big hatred initially is for C3 AI, which, although run by a giant of the industry, every time they just barely do something good, the stock will go up 10%. And then over the course of the next quarter, it'll decline. They're behind in the race. They're way behind in the race. And I would bet that the only way out really good, kind of like Palantir, is going to be for them to get bought, because it could be years before they make any money. And even the best in the business, run out of other people's money. So I'm not too big on that, although there is other AI plays that are good,
Yeah.
and I think they could get bought, but I wouldn't be a buyer. And Palantir is actually kind of in there with them on this. It's a kind of a 2-for-1 of both stocks.
Right.
Again, you have industry giants leading, Peter Thiel leading the cause, but they always have so much burn and so much cash and so many things going wrong that will it ever be a consistently money-making entity, which I don't think it will be. Well, so I think they're best.
The other thing I don't like about Palantir is it relies too heavily on government contracts.
Yeah, it's almost all defense
right.
AI spending. And yeah, that's somebody who's going to have to tighten their belt pretty soon too, because the government's $34 trillion in debt and they can't continue at that pace.
Right.
All right. Nextly, we have SoFi, the kind of millennial Gen Z bank, which apparently has enough money to throw it on a stadium, but doesn't really make any money. And this is totally dedicated to Gen Z and millennial accounts, which are numerous and many, and they fill a niche where I'm sure that demographic says, hey, it feels hip to be at SoFi, and I can get a loan that's SoFi, and maybe a student loan could be processed through there. But at the end of the day, how are they going to compete with the big boys in the business? They're always going to be a second-rate player. They're always going to be somebody that's like, okay, maybe if I need to open an account, but they're never going to be able to challenge the big money center banks in any way,
no.
especially in places other than California and other than that. So kind of a seller of SoFi. And another one that I think that we both think is poorly run is IBM, because again, a lot of the business is hardware, old school based. And granted, they tried to get into the AI space and big data early with Watson. And had they pursued that more aggressively 10 years ago, or whenever they really started that push, they would have been in a better position now. But it's a bloated, overly, I think they have too many people, in the C-suite level and too few decision makers doing very good ideas. And they're just losing the race to the competition.
So the tragedy,
despite the solid dividend, which has stayed in place for the most part.
But the tragedy of IBM,
it's not a good idea. It's gone the way of like a GE, where there was just too many irons in the fire and they couldn't handle them all. Yeah. And so,
listen, we're looking at what may have been the great U.S. tech company of the 20th century.
Absolutely.
If you look back and say, gee, young people say, well, IBM, are they a startup? No, IBM was a Fortune 10 company in the 70s and 80s.
Yep.
It was the Microsoft rolled up with NVIDIA, rolled up with
Apple. Yeah.
All of it.
Yeah. And they just totally, but kind of like the car companies did in the 70s, they took their position for granted and didn't do the kind of spending on new products, new ideas. And again, Watson was going through big data 10, 15 years ago, and it never, ever, was in position to challenge NVIDIA and the other big AI players. So that's definitely one. Lastly, because I did lump kind of Palantir and C3 AI together, it's kind of a 2-for-1. Lastly, I am very much a seller of Moderna, because I think that, not unlike for the reason why I like Pfizer, this is the opposite reason, that they don't have a strong bench to take up the slack from the lack of COVID vaccines. And there's been a lot of discussion about mRNA. Is it really the kind of process you want to use for vaccines for virus treatment and something of that nature? But I think that their better days are long since over. And there's a lot of smaller companies that have smaller, Novavax and companies like
Sure.
that are in the game too. So they can chip away at what little COVID vaccine market share, for lack of a better term, that they have left. So I think Moderna is probably still way overpriced.
Yeah, and it's another example of a company where a lot of that competition is not publicly traded competition.
Absolutely.
A lot of this stuff are, startups where somebody has like 6 phase 3, suddenly those guys raise $500 million. One of their drugs hits, and all of a sudden Moderna has competition that looks like it came out of left field, but some guys who raised a lot of VC money have been working on it for 5 years.
Right. And again, like conversely, when we talked recently about stocks we like, that's why I do like Pfizer, because while they may never recover that kind of COVID vaccine income stream, they have a lot of other products to help fill the bench with, and paying that big dividend and trading cheap. I'd far rather own Pfizer than Moderna.
It's a better deal. Well, for all our viewers, those are the stocks that we would sell as of this point. Even if the market goes higher and it drags some of these with it, I don't like them. Lee doesn't have his. We will be back soon. Really, next time around, we're going to be talking about dividends. So, Lee, I look forward to that.
Okay.
Take it easy.
Good to see you.